We are back in the game again. Everything is green. The Virtuals protocol has almost doubled in the last week. And the question is, how much longer can this rally last? Let's have a look at some on-chain metrics. Let's have a look at the usage of Virtuals. And let's try to find out what's behind all of this. Because fundamentally, there are two approaches to trade crypto. We can either buy several times into an asset, believe in the asset long term, and take advantage of low prices, hoping for a recovery at some point. I do this with Bitcoin. I don't do this with a lot of altcoins though. The second approach is to just ride the current trend. Try to figure out where currently the attention is headed, and then of course sell early enough before others take profit. Now, Virtuals protocol is currently at $1.12. It's up 94% in the last 7 days, and I'm covering Virtuals protocol regularly on this channel. Now, the very first video was published at the end of October 2024. That video got quite some views. The average video is in gray and the first virtual video is here in blue. At the time, we were still at 41 cents. Then came a massive 10x rally to almost $5, then the subsequent crash, and now we're getting back up again. What's the potential upside here? Are we going to revisit the old highs? Now, Virtuals protocol is a launchpad in the AI space. So via Virtuals protocol, AI agents can be launched that also have their own tokens, and it's mainly done on the Base chain. So to a degree, Virtuals is for Base what Pump.Fun is for Solana. So when the virtual price itself is going up, a lot of ecosystem tokens will go up as well. Isn't it interesting how the largest of the Virtuals protocol tokens actually has more liquidity on chain than Virtual itself? So the game token has 8 million worth of liquidity. There's only Coinbase wrapped Bitcoin and Aerodrome that's larger than that. And so it really seems like we have a recovery again. The game is on. It first started with the Trump token going up after the dinner announcement. Then we saw the first Pump.Fun ecosystem tokens doing well. And now here we are, Virtuals protocol is going up as well. So that is what we see in this overview. It's different categories within crypto, and still Politify is doing the best, 80% in the last week, but AI agents on average performed similarly to the Solana meme coins. Now, we are still very early in that recovery. The numbers around Pump.Fun on Solana and Virtuals protocol on Base are similar to that degree. We saw massive adoption and usage in December of 2024 and then the subsequent decline. And the price has recovered faster than the revenue generation of the protocol itself. Almost all on-chain metrics for the virtual protocol still point towards relative silence. Only the number of virtual protocol tokens that are added to the liquidity pool, they are going up again, but the usage itself is still quite low. There is an interesting trend though, and again we see some similarities with virtual protocol and Pump.Fun. It's the number of active wallets on chain, or for Pump.Fun it's the number of newly created tokens. That tended to go up in the last few days. So the trading volume and the fee generation is still low, but there are some new wallets hitting the scene out of nowhere. Now, I always like to look at the smart money. I always like to look at the whales. Because in the end, crypto is a player versus player game. It's not 100% luck. There is some skill involved. In other words, the wallets that have a lot of capital, they tended to make the right calls in the past. They tend to have more skill. So when the big wallets they are buying, then it might make sense to also emulate that. Now, there are 3 versions of the token. There's one on Ethereum. There's another one on Base. This is where Virtuals launched. And we've got a version on Solana. Now, the Solana-based token doesn't really have that much capital. It's just ported over. And we can see this in those charts. So on the left side, we see the number of retail investors. On the right side, we see the number of whales. And in the middle, something in between. The way we make this distinction is by looking at minimum holding thresholds. So to be counted for this chart here, a wallet has to hold at least 1,000 virtual tokens, or roughly $1,000 worth of the token. To be counted for the chart on the right, a wallet has to hold 100,000 virtual tokens, so $100,000. To be counted for the chart in the middle, it's 10,000 virtual tokens. So the number of whales didn't really grow in the last weeks. The number of retail investors, though, did. Note how there's only 15 to 20 whale wallets on Solana. That's very different for Ethereum and for the base chain. Now, isn't it interesting how for the Ethereum base token, the number of whales tends to go down? Now, either those whales are selling or they're moving their tokens over to centralized exchanges. Retail, though, continued to accumulate since the beginning of December. On the base chain, the dynamics are quite different. But again, it's not the whales that are going up in numbers. It's mainly small retail. And small retail started buying in the last 2 weeks. And so that's quite interesting to know, right? The virtual protocol doubled in the last week. We are going up, but the whales are not necessarily buying. It's retail that's taking advantage of the rally. My impression is that a lot of this price appreciation is created by a few people that add leverage to the market. But most bull markets actually start in this way. At the beginning, it all just looks like a short squeeze, and then enough people get bullish around the market, buy in as well, and then the rally just continues for longer. The perpetual futures market for virtual is healthy. In other words, there aren't too many shorts or too many longs in the market. The financing costs are reasonable. And so we shouldn't be expecting any disruptive movements in the price. I don't expect virtuals to suddenly crash by 50% in the next few days. Of course, when things are going up, it always feels a bit iffy to buy because we don't want to end up buying high and selling low. The question is always, what's the potential upside? Now, we've seen how Virtuals Protocol was above $4 at one point, so it's a 4x from here. But the overall crypto market is still, in aggregate, rather risk off. Check out this here. This is the stablecoin dominance. So how much of the entire cryptocurrency market cap is currently in stable coins? When this is very high, the market is very scared, right? It's very much risk off. When it's very low, the market is highly deployed and it's rather risk on. And what we want to see while we are invested is this line coming down. And it seems like the stablecoin dominance can continue to go down quite a bit from here. If more and more of those stablecoins get deployed and the stablecoin dominance is going down, crypto prices will go up. That means Bitcoin, that also means virtual protocol. The game is always about having some kind of edge over the rest of the market, right? Buying things when most people are not believing in something. For example, here, right? The Bitcoin realized price. This is the average cost basis of the entire market. So when the current price is below the realized price, we want to buy. Most people are in losses at that point. The market is giving up. When we are above the realized price, we are simply riding the current momentum. We always have to be prepared to take profit. And some opportunities are better than others. For example, here, right? This comes from the chat of the premium membership, Bitcoin and Ethereum. Somebody posted the realized price for Ethereum. Not for Bitcoin, but for Ethereum. The average Ethereum holder is currently in losses. So probably buying Ethereum at these prices is a good bet. Indirectly, the Virtuals Protocol also takes advantage of Ethereum. Base is a layer 2 on top of Ethereum, so it's another blockchain that syncs with Ethereum, and Virtuals Protocol is a protocol on top of the Base chain. And so since everybody is now so bearish about Ethereum, and since most people don't want to touch it, this is probably a somewhat reasonable medium-term bet. And that's the kind of data that's not necessarily shared in a random free chat. We want to keep premium with as much alpha as possible. And so yeah, we are doing quite well. Here are a few trades that are shared by various members. This was more than 500%. There is of course some leverage involved in this, but it's important to have proper risk management as well. We try to help each other. We try to be one step ahead of most others. And that's how we tend to beat the market. I believe that crypto is a game of both luck and skill. And so in the end, if we play the game for long enough and we accumulate skills in the meantime, all of this random noise will cancel each other out and the expected value of a trade will shine through. And so that's why I've created more than 100 tutorial videos on various on-chain metrics as well, on how to figure out the number of holders. The tool that we've seen in this video is also provided in premium. It's also about risk management. It's also about figuring out how to make money for both directions, right? When prices are rising or falling. So feel free to check it out. It's currently $125 per month. There should also be a link popping up here on this video. Just click on that and it will lead you directly to the website. So see you next time here on YouTube or see you in premium. Cheers.